Okay, in this video, I'm going to go over this homework on sales and operations planning. And I am going to use the sales and operations planning workhorse Excel sheet, which should have been provided to you with the lecture on this topic to solve the homework. This will make things much easier. We don't have to set up stuff from scratch. So I have the homework open here. I'm just going to briefly look at the questions to see what I have to do. So we have a company which makes remote radio-controlled drones, and they had some problems last year. So now they want to make a sales and operations plan for the next 12 months. And we are sitting prior to August because our forecast is from August. So August to July, that's 12 months. That's the year we are planning for. So it doesn't have to be January to December. Month 1 is going to be August for us, and then month 12 will be July. Then we have a forecast, a statistical forecast on quantity, and it assumes the same price. So we're not doing anything with discounts here. And then we have the marketing manager who has Mike has his own forecast. And in Mike's forecast, we are doing ad spending and we are changing the price. We're giving discounts, doing all sorts of stuff. And then, so question number 1, what is the total annual revenue? And then from the statistical forecast and from Mike's forecast, okay, then we have some data on wages and costs that allows us to calculate the expected profit. So then we have to optimize, make an optimal profit maximizing, so optimal from a profit perspective, SnOP plan using statistical forecast, and we do the same using Mike's forecast, and then we have to see which plan gives us more money and kind of why. So the reasons why whichever plan is better. Okay, so the first 2 questions on revenue are really easy, but before we do that, we need to copy all this data into Excel. So we're going to start off. And because the later questions ask us to find the profit maximizing plan, we're going to use the optimizer one, because the planning monthly one is a manual type of work where you do trial and error, and you have to put the data in the yellow cells, and then you have to adjust the green cells to get a plan. So this is manual work, and it may or may not be optimal. Right, so we're going to use this one. So because we have to do the work twice, what I like to do is not to change stuff here after I do the first plan, but to make a copy. So I'm going to make a copy. And so I have 2 copies of that. Let's move them to the front. So the first one is going to be called, well, before you do anything, actually, you should go to File, Save As, and save the workhorse into a new file for this homework, because you want to keep the workhorse in its default state. In case you mess something up, then you can go and make a new copy of the original workhorse file. Also, you might want to use it for an exam or some other homework, and so you want to keep the pristine original workhorse file, which is no errors, is working, because as you work, sometimes you mess up a formula and you get errors, right? So you want to keep the original one. So I've already created a copy called solving homework. Right? So make a copy before you make any changes, and then work on the copy file. So now I'm going to make optimizer monthly. I'm going to make the optimizer for the statistical forecast, stats FC, and we're going to do the optimizer for Mike's forecast, Mike's FC. So we're going to make 2 plans. Okay, so make 2 copies by move or copy, and then click create a copy of the optimizer monthly worksheet. Now I want to put data, so I'm going to make a new sheet called data, where I'm going to put all my data for the questions. So I have it in Excel rather than having it in the browser. So let's copy all this data. So here we have, and it's in a table, so hopefully it will copy nicely into Excel. It kind of did. Let me do match destination format. This is nicer, right? That copied the formatting, but if you do paste options and do match destination formatting, it gives us nice formatting. This is your statistical forecast, right? Okay, and now let's copy Mike's stuff. This is Mike's forecast. Okay, let's copy this into Excel right here. And I like to keep things clean and visual. So I'm gonna make this bold and make this like blue, and let's make this also bold. Actually, let's make this one green, and let's make the Mike's one blue, like a bright blue. Okay, so now I can quickly see which one is which by the colors. Okay, let's make these columns bold as well, and the same color. So I know that all this blue stuff is Mike stuff and the green stuff is statistical forecast. Okay. So now we have some other data as well. Let's just copy all of it now. So then when we're working, we have all the information we need in Excel. So here I have my cost data. Let me put it here so I don't have to scroll down. Everything is in front of me. Okay. This is my cost data. It went down. Make this bold, and costs are going to be red because they cost us money. Okay, great. Now save my work. So let's get started. First, we have to find the revenue in dollars. What would we get in revenue if we go with the statistical forecast, and if that comes out to be true? Okay, expected annual revenue from the statistical forecast. So that's pretty easy. You multiply the units sold with the price and you'll get the revenue. So you'll have to do this 2,500 times 100. That's your revenue for August, plus you add the revenue for September and so on. But we have a shortcut in Excel called sum product. We'll take all of these values, multiply each of them with each of these values, and sum the whole thing up. And this is, and we can format it as a nice dollar sign. We don't need the cents. That's like $5 million. We can just copy this formula here under Mike, and you can do F2, or if you're on a laptop, you do F and F2, or F2 to see which cells it's using. It's using the right cells, the quantities, not the right cells. It's multiplying the quantities by the ad spending. You have to multiply the quantities by the price. Quantity times price for August plus quantity times price for September, on and on and on. So that would give us the revenue, and that's 5,863,750. So that's 2 questions of the homework solved right here. So revenue from statistical forecast is 5 million. So nearest dollar will be 5 and followed by 6 zeros. 1, 2, 3, 4, 5, 6. That goes right here. And then this one would be 5,863,750. 5,863,750 to the nearest dollar. Okay. Let's go to question 3. So we have all the cost data, hiring costs, firing costs, so on. And then what we have is use optimizer monthly. So even it gives us a hint. Use the optimizer monthly, find the profit maximizing sales and operations plan using the statistical forecast. Okay, so we have 2 additional conditions. Keep 10% safety stock for the months August to May. Okay, this 10% of what? 10% of demands, right? Well, basically the safety stock idea is coming from the forecast error, which applies to demands. If your MAPE, your mean average forecast error or prediction error is like 10%, then sales could be they could be plus minus 20% too, but on average they're going to be plus minus 10%. So on average you need about 10% safety stock, right? You usually might want to have more if it's a very profitable product, but anyway, maybe it's plus minus 5% and they want to keep us 10% safety stock, right? Because 2 times MAPE might be more satisfactory. In any case, so we have to keep 10% safety stock. So 10% of the demand for that month, we need to have extra inventory by that much. So as the demand changes month to month, safety stock levels would also go up and down. We want to end with zero inventory as we're going to have a new model next year, so we don't want to have leftover inventory of this model. Okay, so let's do this. So these conditions are not built into the inventory workhorse. So we're going to have to modify the Excel sheet to get to use these conditions. Okay, so we have two extra conditions. First, to start off with, you can just incorporate all the data and just kind of solve normally, and then it won't be the right answer, but then you can think about adding the conditions. Don't get bogged down by the complexity to begin with. Okay, so we want to use this stats FC. We made a copy for Mike's forecast and statistical forecast. So the first thing, we need to copy this forecast into the demand column right here. So if I paste here, it should overwrite all of these cells because there's 12 values. It's a monthly planning file because you also have these quarterly, right? You also have the quarterly ones, but you have to use the monthly one because we are working on monthly data. I'm gonna paste values, so I want to keep the formatting and the nice yellow colors. Let me zoom in. Okay, so let's paste values, and this should now be the values, the forecast quantities that we need. So if we check back with our data, month 4 is 10,000. Yep, month 4 is 10,000. Let's check one more data point. Month 6 is 800, a small number. Month 6 is 800. So that's good. Now the price is wrong. It's 80, whereas our price is 100. So we have to copy that too. So we have to, make sure we modify these default values, which are for some lecture example, into the values for our question. If you forget to modify a value which is in yellow is the inputs, right? Data from questions or case. All the yellow cells should be checked to make sure you've modified them for your context, your problem, right? And so what I like to do is I want to start from left and move right, covering all the yellow cells. That way, I'm sure when I get to the end, I've modified all the yellow cells. Otherwise, if I just randomly modify them, I wouldn't know which ones I've done, which ones I've not done. So I modified these two columns. B and C are done. Now let's go to hiring cost. So we have to go back and forth. Hiring cost 800, and then firing cost is 500. So we'll put hiring cost of 800 and firing cost of 500. So we've done till column E. Now column F has workforce, wage, and hours per worker. Okay, so let's look at our starting workforce. Well, wage, regular wage is $10. Regular wage, 10, okay. Then we need hours per worker. Regular work time per worker, hours per month. This is it, 172. 172, so that's also correct. Now we need, how many workers do we start with? Do we have that information somewhere? Current number of full-time workers right here. That's how many workers you have right now, 40. So we have not 60, but 40 workers. So I'm done with column F. Now column G is going to be max overtime and overtime wages. So how much overtime hours can I have in the wages? Wages are 15. So that's correct, 15. And then how many hours can we work? So max overtime per worker hours per month is 30. Okay, and that's also hours per worker. So the units match, this is 30. So I'm done with column G, and I have to go to column H. I have to do labor hours per unit. That's the labor content of my product. How many labor hours going to making 1 unit of the product, and material costs. These are like your direct costs, labor hours and material costs. Labor hours you can multiply by the wage rate to get the labor cost. These are direct costs of making the product. How much material does it take? How many labor hours does it take, right? So labor hours and material costs. So labor content hours per unit, that's how many labor going to making a drone. That's 2. So that is 2. And then what is the material cost? is $40 of materials, motors and rotors and whatnot, right? That's what we need to make one drone, a remote control drone. And then we have subcontracting cost. If we outsource production, and let's say you don't have to do subcontracting, like let's say that's not an option in a question, you can just set these cells to 0, like by the constraint in your optimizer, say never have a non-zero value here, or you can just set the subcontracting cost to like 99999, like 99 million or something. It'll be so expensive the optimizer will never use subcontracting, right? But can we subcontract or not? Let's see. Subcontracting price, if you buy the drone already pre-made by a supplier, it costs $85. Okay, so that's 85. This is inventory holding cost, and then stock out cost, and then this is going to be the starting inventory, right? This is the ending inventory of the month prior, which is our starting inventory. So inventory cost, starting inventory 0, inventory holding cost is $2 per month. Remember, this has to be per month. So if you do have an inventory cost per year, you'll have to divide it by 12 to get per month, like what you spend per month. Now it's already in per month, so 2 is correct, right? Because it told us 2. And then starting and ending inventory are supposed to be 0, so we start with 0. This does says ending inventory, right? So why am I putting 0 here as starting inventory? Because the ending inventory of the previous month is the starting inventory of the next month. So if the month of August has ending inventory of 2000, the starting inventory of September is 2000. So the starting inventory for the whole 12-month period is 0. So I'm not going to put 0 for the first month. I'm going to put 0 on the month previous to that. So prior to August, which is our first month, the July prior to August ends on 0. So that's the starting inventory of August. So in the ending inventory column, before the first month, before the row for the first month, this is your starting inventory for your next 12 months. Now we need just stock out cost. Stock out cost $50. Okay, if we lose $50 worth of profit, gross margin, or the customer switching cost, customer goes away, buys from somebody else, things like that, it's cost us $50. Okay, and that's it. We filled out all the yellow, we filled out all the inputs, and now it's gonna work on the gray cells. We don't mess with the gray cells. And it's gonna give us solve the problem. Now we do have back orders to set to 0 and ending inventory set to 500. Let's check if this is a constraint the solver is using. If so, we'll have to change this to 0, because remember, in our data ending inventory is 0. If you look at the question, the plan should end with 0 inventory. Okay, so that is already a constraint built into the model, I believe, but it's set to 500. We may have to just change it to 0. So let's check. So the way we do it is, right, in the data area, you should have a button called solver. Now, if you've never used solver in your laptop before, this button will not be there. On Windows, you'll go to File, Options, Add-ins, and Manage Excel Add-ins Go, and here you click Solver Add-in, hit OK, and your Excel might restart or something will happen, and you'll get this button here in the Data tab. If you're on a Mac, I believe you have to go to the top menu bar, go to Tools, Options, Add-ins, and then kind of enable Solver Add-in from there. Okay, might as well enable Data Analysis Add-in. It's in the same spot on both Mac and Windows, so whenever you go to add-ins, also enable the tool pack, which shows up as data analysis. So the solver add-in here showed up as solver, and the analysis tool pack showed up as data analysis, because regression is inside here. So if you're going to do regression, you can do it with this one. Now, if you open solver, the Excel sheet already has the solver set up. So if you open solver, you can see, right, set objective to L that is not correct. we have to maximize the profit. So we have to hit max and go and change this to this cell, profit. Okay, which is E31. So I have to first delete what's in there, and then go and do this. Okay, so make sure you set the max and you're maximizing your profit calculation right here. The min of that was probably, when this workhorse was created, probably I was running some model to minimize back orders or something. So that's a leftover from there. But make sure you set max and max the profit. By changing cells, don't touch this. Already set to the gray cells. Okay, these are going to be the solver cells. These dark gray cells are going to be right here. And then these are all the constraints which are set up for you. So that are all fine. We don't have any constraint for ending inventory right now. It's written here, but it's not in the solver system. So it's going to solve without us. Let's just solve it for now. It's going to run for a while. So it gave me okay. So it gave me the option that it was taking too long. Do you want to continue? I hit continue. So sometimes it may run for a few minutes, and then keep solver solution okay. So it's making like $1.8 million. It is ending on 0 inventory, luckily, but we should add the constraint to ensure that. Okay, and it gave me a solution. However, I don't know if the safety stock is fine, because look here, I'm ending on month 5 with 24 pieces of inventory. My forecast is 15,000. 10% of that would be 150. So I should have at least 150 units in inventory here. So I don't have 10% safety stock. So we have to add that condition. But without those extra conditions, it gave me a plan on how many workers to hire, how many to fire, overtime hours, how many of those to use, the production. I'm not subcontracting because that's expensive. I don't have any back orders, so the plan looks kind of okay. But it doesn't satisfy all the conditions we have, so we're going to add those in now. Okay. So now we want to make sure ending inventory is set to 0, and we want to have safety stock. Let's add a column here for safety stock, and at least we should have, on any month, we should always have 10% of the demand. So 0.1 times the demand for that month. So 250, we should always have at least 250 units during the first month, and you can drag it down. Okay. But actually there's a catch, because it says keep 10% safety stock for August to May. For June and July, no safety stock is required. So month 1 is August. June, July are the last 2 months, so we can delete that. We don't need any safety stock here because we're trying to end with 0 inventory. If you have safety stock here, you're contradicting yourself. You want safety stock and you want to end with 0 inventory? Like, that's a contradiction. So we don't need a safety stock here, so we can end with 0 inventory, but we need this safety stock in the other months, August to May. Yeah, remember month 1 is August. Okay, so let's add a couple of constraints. The first constraint will be that this ending inventory must always be bigger than equal to the safety stock for these 8 months. And then for the last month, the 12th month, the ending inventory must be 0. So we go to solver, we add a constraint that these 8 values have to be bigger than equal to these 8 values, add, and this last value has to equal 0. Okay, so we added those 2 constraints. Okay, and now let's solve. Okay, and now you can see that the ending inventory is fine. We are always above this. See the safety stock. Oh, I'm sorry, I said 150. This is 1,500, right? 10% of 15,000 is 1,500. So we need 1,500 safety stock here. So let's check month 5. We do have 1,500. See? It was 24 before. So it did increase the production to end with a safety stock of 1500 here. So we are maintaining 10% safety stock, and then the last 2 months we make inventory go down to 0. So everything is working as usual. One thing you do want to check is make sure the method is set to simplex LP and not some evolutionary or nonlinear solver, because they take too long, and sometimes they may stop because it's taking too long, and they may not give you the optimal solution because they stopped too early. Okay, so make sure you're solving with simplex LP and you are maximizing your profit. If you look at these cells, it calculates the total cost by using these cost values, and it calculates the total revenue, which we knew was going to be 5 million. Remember, we calculated the revenue here. It was going to be 5 million if we are able to make all the sales, if we don't have any back order or any missed sales or lost sales, right? And then our profit is this. So our profit with the default statistical forecast with these safety stock conditions and ending inventory conditions built in is 1831620. Okay, 1831620. Okay. Now we have to do the exact same thing with Mike's plan. Okay, so for Mike's plan, actually I'm going to delete this sheet I copied first. Okay, do you know why? Because a lot of these costs are going to stay the same for Mike's plan. Mike's plan changes the forecast, changes the pricing, but it's not going to change like the labor costs. So I don't want to enter all these costs again. I may make a mistake entering them. So I'm going to delete this old file, and I'm going to make this as my base and copy it. Move or copy, create a copy. Okay. And this I'm going to rename to Mike's forecast. Okay. Because a lot of the cost here is the same, just the forecast is different. So let's copy Mike's quantities, forecast quantities, up here. Okay, and now we have to update the pricing because Mike is messing with the price. Okay, Mike is fiddling with the price, giving customers discounts, trying to rack up some sales. So let's see what happens, right? So this is our pricing, as always, paste special values. Okay, then what else is new about Mike's plan? There's something else new. We have ad spending, we have additional cost. So we have to copy this additional cost, and let's copy it here into this column, and that is our ad spending. Okay. And this is a cost. So we have to subtract from profit. We are doing revenue minus this cost. But this cost right here, is not factoring in ad spending because the base model does not have any ad spending cost, right? And this is an input. So we should color it into yellow to show we have to input these values because we're updating our model. So what I'll do is I'll take this total cost. Either you can add, you can do, let me just sum it here to make it easy. Let me sum up all the ad spending because it doesn't matter which month you spend the money. That's the money you spend over all the year, and we just subtract this from the profit. So I can either in this profit equation subtract the additional ad spending, or I can go to the total cost equation and add the ad spending as a cost in there. Okay. This is a very long equation. I don't want to mess with that. This is a simple equation. I'll mess with that. So I'll subtract, this is revenue minus cost. I have an additional cost. I'm going to subtract this additional cost from my revenue. Revenue minus the original costs I have minus the ad spending. That's going to be my profit. So my profit equation here has to change. So at this point, you have to be comfortable modifying these Excel files because you should have learned Excel in the business analytics type of courses or stats courses, and you should have learned some optimization in your analytics courses, which prior to this course, right? So you should have maybe not built as complex a model, but you're not building it from scratch. I'm already giving you the model, just making small adjustments. So you should be comfortable making these adjustments to match the real life scenario that you have. To make sure you capture all the details. So if we go to Solver, Again, we have to make sure we are maximizing the profit. So maximizing E31, that's great. And then we already have the safety stock built in because we copied this completed forecast thing from here. So we built in the safety stock, we built in the ending inventory, and then I made a copy for the Mike's forecast. So you'll see that, you know, it's J10 to J19 is going to be bigger than, you know, P10 to P19. That's already built in. If you look here, the J10 to J19 is bigger than or equal to P10 to P19. That's safety stock. And then J21 equals 0, which is J25. That's ending inventory of 0. All that's built in. Simplex LP, maximizing the profit, solve. Okay, so we solved. And we're hiring a lot more workers, right? Then firing them. And oh boy, what happened here? Look at our profit. It's even less than $1 million. It's actually almost exactly $1 million less. We have lost $1 million trying to make these insane amount of sales in August, September, October, November, and December, 2 holiday months, by having to hire and fire lots of workers and building large inventories and incurring all of these additional costs. And because we're giving deep discounts in the sales months, you know, the benefit is not that much because you're spending a lot on materials, spending a lot on labor, spending a lot on hiring, firing workers, spending a lot on inventory, and we are not really making a big profit here, so our profit actually went down. So the profit from this plan is 801,685. So we could go back and put in 801,685. And that's it for the homework read. Let me just have question 5. Select all the reasons below that explain why Mike's plan with greater unit sales and actually greater revenue too. Even the revenue is more, 5.8 million versus 5 million, has less profit. How could your revenue go up and your profit go down? Well, your cost went up more than the revenue went up, right? So anything that in the Mike's case increases our cost, that's not in the default case, that's the answer to this question. A lot more workers need to be hired and fired for Mike's plan. Increasing the hiring and firing costs. Let's double check. Okay, so workers hired, the total is 167. We hire 167 workers. We lay off 207 workers. If I compare this with this plan, I'm hiring 54, laying off was 66, so a lot less workers hired and fired in the original plan versus Mike's plan. So yes, Mike's plan does have higher hiring and firing costs, so that's a reason. Mike's plan has a lot more variability, forcing production to increase and then decrease capacity, which is expensive. This is true, because if you look up from about a few thousand units in sale, we go up to 34,000 units, then we fall to 50. So the variation is a lot more. And vision here is a lot less. From a few thousand, you go up to 10 or 15,000, not 40,000, then you drop to 800, not to 50. Also, to check the variation, you can calculate the standard deviation of this time series, 4189, versus the stdev.s, standard deviation for Mike's time series, Mike's forecast, 10,864, 4,189, much higher standard deviation. So yes, we do have to adjust our capacity up and down by hiring and firing workers. Also using overtime. Look at that. Overtime hours in Mike's plan versus 28 overtime hours and then 40 here. So overall still more overtime hours as well, right? So yeah, we have to adjust capacity using more overtime and more hiring and firing of workers. So that's a reason. Production is doing something sneaky to undermine Mike. Nope, this is a mathematical model. There's no emotions, love, or hatred involved, and nobody's trying to undermine Mike. Excel and math doesn't do that, so that cannot be a reason. Mike's plan requires greater use of overtime. This is likely true. Let's just sum up the overtime hours. 105 hours versus 68. Yes, so it's minor, but it's a reason we do use a little bit more overtime. Mike's plan give deep discounts in the peak months, so the units, while more units are sold, revenue increase is not that much. That is true. If you look at the units sold, you know, we go up to 50,000 in the original plan total, and then we go up to 75,000, so 50% increase in the units sold. But if you look at the revenue, it's not a 50% increase. It's like less than 20% increase. So 50% increase in units, but the revenue only goes up by less than 20%, which means that we're giving deep discounts. Our dollars are not matching the increase in units. But we still have to hire the labor to produce the units, but we're not getting all the dollars because we're giving these deep discounts to make those sales. So heavily discounted sales don't give us as much revenue and obviously as much profit. So yes, that is a reason, the discounting. Optimizer Excel template uses buggy and biasing in the market bank. Nope. The Excel template is fine unless we made a mistake. So maybe, but not likely, because we double checked everything. And Excel, it does not have biases. It's not a person, doesn't have emotions. Mike's plan has ad expense. This is true, because remember, we had to adjust this plan to subtract this Q24, this $86,000, which is not here. We're not doing any advertising here. So that's 0 here and 86,000 here. So 86,000 dent in profits just from the ad, right? Which is reducing our profits. I mean, it's also helping us to get these higher quantities, but then we're also giving deep discounts. So, it's a mixed bag, but in terms of cost, it is an additional cost. So I would select that, and then that would be my answers for this homework. Okay. Then you can hit submit. Okay. So hopefully you now know how to use the optimizer files. Okay. Don't mess with the gray cells, mess with the yellow cells. You can add constraints, adding your own additional cells and adding constraints to solver. Make sure it's set to maximize the profit, because you have the revenue. If you're not given the price, and then you can't really calculate the revenue, then you only have cost. In some cases, then you want to minimize the cost, and you do minimize, and you minimize the total cost. That can happen, right? The revenue, whatever the revenue is, just want to do a minimum cost plan, because you're not adjusting the price. The revenue is like fixed if you meet the forecast anyway. So that can happen. You may have to, in a future question, hit minimize and minimize the total cost. Never minimize the profit. You have to hit minimize, and then you change. You hit minimize here, then you hit this to change the cell to the cost cell. So for now, for this one, you're maximizing the profit, and make sure this is simplex LP, and then you can hit solve. Okay. If for some reason your solver does not have the constraints, you can email me to get a new copy of the solver. It should have the default constraints built in. Obviously, you have to add the constraint about the safety stock and add the constraint about the ending inventory. Okay, which is J21 equals J25. This is the ending inventory constraints, and J10 to J19 has to be bigger than or equal to P10 to P19. That's the safety stock constraint. So that is it. Hopefully this was a fun homework. This is showing you why Walmart does everyday low pricing, why Apple does not do a lot of deep discounts, because there is a cost to having a very up and down type of production and trying to meet very up and down demand. Is more costly than trying to meet more stable demand, right? So if you can reduce the standard deviation of your demand, you can have a more efficient supply chain. You might say, well, these plans are unrealistic because we're not gonna fire so many workers, okay? Because we're gonna produce some other product next year. So you can say, I want to end with 100 workers. So you can set a constraint that this cell equals 100, okay, and then not fire as many people. So you can add a constraint that this cell equals 100, right, and then solve, okay, and then it's still better to fire these workers to not pay their salary for so long, and then just hire 100. Or you can set a constraint that you always, all of these cells, you never want to go below 100 workforce. So all of these cells have to be bigger than or equal to 100. So you can do all that stuff. I'm going to take out that constraint of cell F20. I'm going to delete that just to keep it to what we have. But you can do all these constraints to make these plans more realistic. You can add constraints on how many you can hire, how many you can fire. And then you may have to use subcontracting if you can't hire enough, because there may be a limit. It might not be easy to hire 150 in 1 month and train them, right? Because whoever you hire has to be trained. So the optimizer may not give you a very practical plan, but then you can add constraints to make it more practical. You can say, okay, you can't hire more than 20% of the workers you had in the last month. So you can make a column here, just equals each month you set it equal to the last month, and you said this one has to be less than equal to 20% of that or 50% of that. So if your workforce is 100, you can only expand it to 130 in 1 month, not to like 200. And once it's 130, then you can expand it to, let's say, 170 next month, and so on, right? So you could add all sorts of constraints to make it more realistic, not just hire 150 and fire 200. So you can adjust things like that. So it's still a very nice way to get. And sometimes people call this a first cost SNOP plan, because we don't want, there's certain things we may not want to do. We may not want to end in a very small amount of workforce. We may have an ending workforce constraint, right? You might not you might want to end with non-zero inventory. So you can do all of that stuff depending on the situation. So right now we're going to keep these plans because we're asked for the optimal plan, and we only put in the constraints we are asked in the question. But if the question asks you, if you want to use it in real life and you want to add constraints about not hiring beyond a certain limit because you have a certain capacity to hire and train, and not firing beyond a certain limit, you can certainly do that to make these plans more realistic in real life. Okay, so that's it. Hopefully this was helpful.